Now, since that stimulus package, talks of a property crisis, high youth unemployment, and weak consumer demand have died down. But that stimulus package was inadequate at addressing core issues, and the euphoria of the stimulus package might be dying down. We might be facing the biggest crisis in human history within the next couple of years if we continue on the current path, the current trend that we are on financially. China's stock market surge after the recent stimulus package has brought in a wave of optimism, but that rally may be running out of steam, and these big increases always seemed unsustainable. As global uncertainty lingers and internal challenges remain, the question is, can this momentum last, or is this rally about to come crashing down? Now, in this video, we're going to discuss the factors behind China's recent stock market gains, and we're going to also discuss why they may be at a turning point. Now, before we get started, two things that I have to ask for. Smash that thumbs up button for me. Trust me, it's going to be good for your thumb. And also, leave me a comment down below with your opinion on China's stock market. China's stock market has been red hot since that economic stimulus package. Now, China's stock market is up over 20% from September lows, and it is all fueled by that stimulus package. That part of it was aimed directly at propping up the stock market. Now, part of it was also for interest rates, mortgage rates, and home buyer rules were also changed. Now, since that stimulus package, talks of a property crisis, high youth unemployment, and weak consumer demand have died down. But that stimulus package was inadequate at addressing core issues, and the euphoria of the stimulus package might be dying down. Now, we have recent data that has come out that points to an economic slowdown in China. Industrial industry profits dropped 17.8% in August from a year ago. Retail sales numbers and fixed asset investments also showed slowing numbers. Now, I've mentioned in previous videos that a much larger stimulus package was called for in order to properly address the issues at hand for China. A stimulus package to the tune of trillions of dollars, a big stimulus package that goes to different parts of the economy, money directly to consumers, because remember, it is weak consumer demand that is at the core issue of the stuff that's going on in China, and also overcapacity. You have so much stuff that gets produced in China, and you have it's there readily available for the consumers. A consumer that doesn't have the money to spend on it, a consumer mind frame, a way of thinking that doesn't want to go into debt. You have overcapacity, a certain type of consumer, and then the issues as far as the high unemployment and the property crisis also haven't been properly addressed. It's while the stimulus package was good, it was applauded. Obviously, it did prop up the stock market and, making it easier for people to buy houses. All of those things are good. It is not enough at addressing core issues, and a much larger stimulus package would be needed in order to actually do that. Now, China's economic slowdown is not something that's exclusive to China alone. This is an issue that we are seeing all over the world. There is a global slowdown that is taking place. It is dangerous. We are at a scary point in human history. And I'll say this, if governments were not stepping in right now in order to prop up these economies, man, we would have such a different talk right now. The situation would be so much different. Governments are going into massive amounts of debt just to sustain their economies, just to maintain 2, 3, 4% growth on an annual basis. We are on an unsustainable path. With the way that prices have gone up over the last 5 to 10 years, It is it is unreasonable to think that consumers can continue, the average consumer can continue to live comfortably in the world that we have created. Now, you have some people that are going into large amounts of debt just to maintain a comfortable, regular lifestyle that was available for more people before. But we have corporate greed, we have rich people that have just continued to amass the majority of the money, and the majority of the world, your everyday person, is just living a harder life right now than they used to live 5 to 10 years ago. And governments are just kind of stepping in, tweaking, doing things here and there just to kind of keep the ship going. But you got to understand, we are at such a scary point in society, and the slowdown, while it is, just a steady slowdown that we are seeing, we might be facing the biggest crisis in human history within the next couple of years if we continue on the current path, the current trend that we are on financially. And I don't really see any change that's taking place. Now, lowering interest rates is a good thing. I understand how they are valuable economically. They make interest go down, so consumers, while they're going into debt, they're paying a little bit less in interest. But again, at the very core of the issues that we have going on, it doesn't address it. People are not making as much as they used to compared to how much inflation has gone up. The lifestyle quality of people has gone down, and it's trending, it's continuing in that way, and it's everywhere across the world. We're talking about weak consumer demand in China. Now, other places might have higher consumer demand, but it's because of debt that demand is there. If the debt wasn't there, then if people had the same mindset as the consumer in China of not going into debt, we would be completely screwed. Something is going to have to change. We are going to have to reset and get on a different path, because the current financial path that we are on globally is only going to lead to the biggest crash that we have ever seen in human history. Now, before we go, I have to ask you for two things. Smash that thumbs up button for me if you like the video. Trust me, it'll be good for your thumb. And also leave me a comment down below with your opinion on China's stock market.